The biggest mistake business owners make when leaving Australia is not where you move, is how you take your money, because this is where you lose hundreds of thousands of dollars, sometimes more. Not because you did something wrong, but because you didn't understand how extraction actually works. I'm Vina White, CEO of WellSafe, and in this episode, I'm going to walk you through where you lose money when you exit Australia, because this is the part you don't see coming. If you think becoming a non-resident means you can take your money out tax-free, you're relying on an assumption, and this is where you get caught, because the tax outcome is not determined when you leave. It's determined by how your money is structured before you leave. This came up in a call recently. You've built a strong business, a few $1,000,000 in annual profit, and several million sitting inside an Australian company, already taxed at the company level. But your question isn't clear. What happens to that money when I leave? Can I take it out tax-free as a non-resident, or does it get taxed again? And this is more common than you think, because at that stage, it's not about trying to avoid tax. It's about not knowing how the rules actually apply, and that uncertainty is where mistakes happen, because ambiguity in this area becomes expensive very quickly, because what matters is how those profits are held, how they're distributed, and what changes before and after your residency shifts. And if that's not clear before you leave, that's where your exposure starts to build. This is where you get caught, because the critical decisions need to happen before you leave, not after. For example, if you have assets or investments, the timing of sale can determine whether you receive a 50% capital gain tax discount or lose it entirely. And that comes down to one thing: the date you become a non-resident. Not intention, not plans, but the actual sequence of events. Now let's talk about the big one: taking money out of Australian structures. You might have retained earnings, accumulated dividends, investment portfolios, or capital sitting in companies. And the question becomes, how do you access this once you leave? Because if it's not structured properly, you can trigger additional tax, withholding issues, or unnecessary leakage, even when that money has already been taxed. If you're a business owner, this becomes more complex, because it's not just about taking money out. It's about how your business operates after you leave. For example, if you move offshore, but your Australian company is still generating income, you need to consider how you are paid, whether you're billing from offshore, whether profits remain in Australia, and how that interacts with tax rules, because you cannot simply turn off Australian tax by changing location. This is the key point. Exit is not a single event, it's a sequence, and your money needs to be aligned to that sequence. If it isn't, you end up with trapped profits, inefficient structures, or avoidable tax exposure, because these decisions are very difficult to fix later. Once assets are sold, once structures are set, once your residency has changed, your flexibility reduces significantly. And that's when you realize you should have planned earlier. Leaving Australia does not determine your tax outcome. Your structure, your timing, and your extraction strategy does. If you're planning to leave Australia, or you've already started, this is where mistakes become expensive, because how you handle your money before and during your exit determines the outcome. If you want clarity before you move, not costly mistakes after you move, request an exit position review. We'll show you how your current structure performs, where your risks sit, and what needs to change before timing locks things in. Because once those decisions are made, if you are no longer planning, you are dealing with the consequences. And this is where you lose money when you leave Australia. And in episode 3, we'll cover why your offshore structure often doesn't work the way you think it does, and why moving overseas alone does not take you outside the Australian tax system. See you there.